All right, guys, welcome to strategy creation part number 2. So, as you guys remember, this is how we start looking into our trades, okay? This is kind of our step-by-step plan, our base foundation of how we're going to start looking into trades. So, now that we understand this, we're going to go into identifying these on the chart. And as you guys know, I pretty much told you guys, hey, the past 2 weeks, by using this, there wasn't even a trade to take. So with that being said, we kind of have to go back 2 weeks in order to start identifying these. And again, it's not an issue because as we start adding on to this, you're going to start seeing that, hey, there's a potential trade to take almost every single day, not with just... Wow, booger came out because I got so aggressive with you guys. Not with just this, but with the other things that we're able to add on to this, okay, that's how we're going to start finding more and more trades. But for now, with just this basic ass, simple ass strategy, literally square one, noob territory, this is all that we can do for now, okay? Because again, you guys don't know anything about trading. You guys don't even know how to enter a trade. You guys don't know where to put your stop loss. You guys don't know where to put your take profit. We're going to get there in part 3 probably. But right now, let's just talk about identifying these, okay? So, that being said, let's go back like 2 freaking weeks. Let's go back in here. Okay, this seems like a decent spot. First of all, we're only trading New York session. Okay, so we're actually just gonna go in here and start just highlighting every New York session from here on out. Boom. I know that there's like an indicator that you can put on that shows New York open, but me personally, it's kind of like weird to do that if you ask me. Okay, I'll move that one later. Friday. I need to keep in mind that some of these were high impact news days, but regardless, we're just gonna walk through as many of these as possible. Boom, okay, cool. Which one was the one that was set at 9? This one. 9:30 now. Bet. Okay, we're gonna start right here. Let's go into the 4 hour. Start off. Remember, what are we looking for prior to market open? Okay, we're looking at the overall bias of market. Okay, so right here, we got a break of structure to the downside on the 4 hour. Price continues lower. Okay, boom. Right. We don't know that this 4 hour candle is going to close bullish until like 30 minutes into market open. So we just need to keep that in mind. Okay, so for the time being, price is bearish. Okay, on the 4 hour. So what are we looking for? We're looking for sells. Scale down into the hourly. Okay, on the hourly time frame, again, we do not understand that price is going to be bearish until we see, boom, this hourly candle close, which is 30 minutes into market open. Okay, so for the time being, we're still bearish. Okay, so we're bearish on both the 4 hour and the hourly, okay, because we never see a break of structure to the upside on the hourly. We see this break of structure to the downside, okay, this is the high, this is the high, this is the high. We don't see a break of structure until market open. Okay, so with that being said, we can scale down into the 5-minute time frame, not the 15-minute, the 5-minute, because we know, hey, let's stay on the hourly for a bit. The hourly time frame and the 4 hour are bearish. Okay, from there, what are we doing during pre-market? We're marking out highs, right? We want to identify our high time frame draws of liquidity. Okay, so boom, we're marking out 1 hour highs and 4 hour highs. Okay, boom. Okay, prices are probably not going to go all the way up until that 4 hour high. All the way up there. All right, okay, we scale into the 5 minute time frame. Okay, boom. Market opens. What do we see? We see price draw into these hourly highs. Okay, we have this hourly high all the way up here that doesn't get hit. We see price draw into these hourly highs. What are we looking for? Boom, we can pull our muddy hands out of our ass after these high time frame draws of liquidity get hit, and we can start looking for a break of structure on the 5 minute time frame. Okay, from there, boom, we see a break of structure to the downside. Now what are we looking for? We're looking for one of our confluences. Okay, where do we see a confluence? Well, there's an imbalance right here, right? From this wick down to this wick, we see it get filled, and then boom, we see bearish confluence out of that. What else can we identify? Well, there's an order block, but it starts all the way down here. There's a breaker, but it starts right here. So really not much else. We can go ahead and mark out equilibrium if we would like, but we really just need one of our other confluences, our continuation confluences, to be able to enter, because we have what? High time frame liquidity sweep. We have our 4 hour and our hourly in line. We got our break of structure. We're just waiting for that last confluence with rejection to the downside. Okay, so with that being said, we see boom, price comes up, we see a break of structure to the downside with this candle right here. We see this imbalance get formed. We see price push up into it. We see this bearish candle, but what happens? Remember, I want to see the candle close out of there. Okay, so boom, we finally see this candle close out of there. Perfect entry right here. Okay, and then from there, we're not going to talk about take profits, but we can see that after this entry, yeah, we're stuck in a little bit of drawdown with this leg up, but then boom, price floods to the downside. Okay, so that's Monday. Let's move over to the next day. Start off on the 4 hour. And again, some of these days we probably won't even see trades. Other days we might fucking lose trades, okay? But again, like I literally just drew out all these days in a row, and we're going to try and get through a lot of these, okay? And again, the more we do this, the more you guys will see how it works. So, going into Tuesday, okay, this is market open. All right, we see the 4 hour is bearish, okay? So what are we looking for? We're looking for sells. Why? Because the 4 hour is bearish. Our bias is bearish based on the 4 hour. Then what do? We try and see what time frame we can scale down into by looking at the 1 hour time frame, okay? So boom, we scale into the 1 hour time frame. This is Monday, Tuesday. Okay, we scale into the 1 hour time frame. What do we see? Boom, prior to market open, we have these hourly lows. Okay, we had a break of structure to the upside, but then boom, prior to market open, we see a break of structure to the downside. Okay, so what are we? We're bearish on both the 4 hour and the hourly. So what are we looking towards prior to market open? We're looking for highs within the market, right? Because we're bearish, we're looking for high time frame sweeps. So we have an hourly high right here. We have an hourly high right here. And, right here. And the next hourly high is all the way up here. We could also look at the 4 hour, but I believe this was a 4 hour high. From there, since the hourly and the 4 hour are both bearish, we're able to scale into the 5 minute time frame, okay, and start looking for trades. Okay, we get in here. Market opens. We sweep out one of our high time frame draws on liquidity. What can we do? Pull our hands out of our ass. Now what are we waiting for? We're looking for a liquidity sweep or sorry, we already had our liquidity sweep. We're waiting for a break of structure to the downside on the 5 minute. When we get that, literally right after, boom, we break structure to the downside on the 5 minute. Now, let's mark out literally every single one of our confluences. This leg up, what does that turn into? This turns into an order block. I'll go ahead and just turn that into a blue thing. This identifies the order block. What is this down move prior to that break of structure? Boom, this turns into a breaker. What else can we identify? We have, boom, this is a fair value gap. We also have this is a fair value gap. Okay. We can go ahead and mark out equilibrium from boom, swing high, down to swing low. Okay. So let's see. Out of all these confluences, which one gets hit? Did equilibrium get hit on this pullback? Nope. Did the order block get hit on the pullback? Nope. Did the breaker block get hit on the pullback? Nope. Did this fair value gap get hit on the pullback? Nope. Did this fair value gap get hit on the pullback? Yes, it did. Okay. We see price get a move up. Okay. We see the imbalance from this wick down to this wick. We see one move up, and then we see boom, wick right into it. And then what do we see? It closes bearish out of that. Okay. Entry right here on that close. And again, I'm going to show you guys how we can get better entries so we're not stuck in drawdown like this. But what do we see? Okay, price moves down for a little bit. Hip, hip, hooray, psych. We move up, we fill this imbalance in a little bit more. Again, we don't know where our stop losses and where our take profits are yet, but we see long-term price makes a big move. Boom. 22 ticks to the downside for an awesome bearish move. Okay, that's 2 days in a row that we crushed it using that strategy. Okay, let's move on to Wednesday. Let's see how Wednesday played out. And again, this is like not cherry picked. This is literally me walking through the shit with you guys. Okay, so this was Monday, Tuesday, Wednesday. Okay, so going into Wednesday, what are we? We are bearish on the 4-hour time frame. Prior to market open, right? We have these highs right here. We have these highs right here. We never see a break of structure to the upside until obviously after and during the day. But we're bearish on the 4-hour. What are we looking for? We're looking for sells. Okay, we go into the hourly time frame. Let's look at the hourly prior to market open. Okay, what are we? We are bearish, right? Because we see, boom, there's no highs that are being broken. Okay, going into pre-market, what are we doing? We're marking out the high time frame draws of liquidity. What are we looking for? We have, boom, these hourly highs. We also have, boom, these hourly highs. We also have, boom, these hourly highs. All of these have potential to be draws on liquidity. Since both the 4-hour and the hourly are in line, we can scale down into the 5-minute to be able to take our confluences and take our trade. Okay, let's get into this. Okay, market, boom, market opens. We see, boom, hourly time frame, confluence gets hit. Hands out of our ass, okay? What are we looking for? Break of structure to the downside. Boom, when do we get it? Right after, okay? Now what are we looking for? Okay, let's start labeling our confluences. We have an imbalance right here. Okay. We have this is a breaker block, but price doesn't even get any lower than that, so there's no even like retesting this. We have this move up as an order block, but again, price isn't even underneath there at that point. And we can go ahead and mark out equilibrium from these highs down to these lows. And we don't see that get hit either. So our entry is going to be on this fair value gap. This was a trade that I took and I actually lost on this trade. However, we'll go over NASDAQ on the same exact day and show you guys how we won on this. But continuing, or actually there's no reason to even do that. This is just explanation's sake. I don't need to show you guys that this shit works. Okay, we come up, we sweep liquidity, we get a break of structure to the downside. Okay, we see this imbalance. Okay, we see boom, it gets filled. We see boom, closure out of that. This is going to be our entry right here. Unfortunately for us, you probably would have been stopped out. I personally was stopped out on this trade when I took it, but we can see that price ends up continuing down, making a downwards move and then boom, news came out this day, price ends up moving higher and higher. Okay, and like I was saying, on NASDAQ, there was a similar trade that ended up hitting take profit. I'm pretty sure I put it on like a trade recap somewhere. If you guys really want to go over and look at it, you guys can. But boom, first L using this. 2 wins, 1 loss. Okay, let's move forward to Thursday. See if there's any trades to take on Thursday. We're grinding through this. Monday, Tuesday, Wednesday, Thursday. Okay, Thursday, what are we? We are bullish on the 4 hour. And I think if I remember this correctly, there were no trades to take on this day. Okay, so we're bullish on the 4 hour. Why? We got a break of structure to the upside right here. Boom, carrying into market open, right? We're seeing nothing but bulls. Okay, go into the hourly time frame. Oh, wait, there actually was a trade to take. Okay, go into the hourly time frame. Boom, we see that we're breaking structure higher and higher to the upside on the hourly time frame. Cool, so we're bullish on both the 4 hour and the hourly time frame. Another perfectly aligned high time frame for us. We've only been able to scale into the 5 minute. We haven't necessarily had one of those 15-minute entries yet, okay? Hopefully we can have an example of that sometime along here, okay? So, boom, what are we looking for prior to market open? We're looking for high time frame lows to sweep because we're bullish, right? Okay, so we have this hourly low, we have this hourly low, and all the way down here, we have this potential hourly low down here. Okay, what do? We scale into the 5 minute. We're waiting for those confluences to get hit, and then we can pull our hands out of our ass if we end up seeing anything. Okay, oh yeah, now I remember this one. There's still no trade to take. Okay, so on this, we see boom, market opens. We can pull our hands out of our ass because we see that liquidity had been taken out. Our high time frame liquidity is taken out. What do we see after that? A break of structure, boom, to the upside. Now what are we looking for? We're looking for our third confluence, okay? So boom, we have an imbalance right here. We have an imbalance right here. This move down turns into an order block, and this move up right here is our breaker. Okay, we can also go ahead and mark out equilibrium. Boom. Do we see any of our confluences hit? No, unfortunately not. Okay, we don't see equilibrium hit. We don't see this imbalance get hit. We don't see this order block get hit. We don't see this breaker block get hit, and we don't see this imbalance get hit. Again, like I was saying before this, I remember this day. I was never able to take a trade on ES. I'm pretty sure there was a good trade on NASDAQ. Again, you guys can probably go back and look and see if there actually was in the trade recaps videos. But boom, this was an example of a day where there's no trades to be taken. All right, moving forward. Friday of this same week. Thursday, Friday. Okay, Friday, what are we on the 4 hour? We are bullish, okay? Right, we can see price keeps moving higher and higher. Okay, we keep getting breaker structure to the upside. We go into the hourly time frame. What are we? We are bullish, okay? What do we want to mark out? We want to mark out our hourly lows. Okay, we have an hourly low right here. We have another hourly low right here. That was actually already swept. We have another hourly low right here. That's pretty much equal that hourly low. So boom, this is really our only hourly low. What are we able to do? Since the 4 hour and the hourly are bullish, we're able to scale into the 5 minute time frame. Okay, there's really only one low that we want to be targeting. Okay, we see market push all the way down, barely miss it, and boom, okay? Yeah, you can say, oh, you know, price came down and swept out liquidity all the way down here. Cool, we can mark it out just for fuck's sake. But again, like this is literally like seconds away from Asian session, right? We're not going to be sitting on the charts for, how long would that be? 11 hours. No, thank you. But anyways, we finally see that get hit. Okay, we get a breaker structure to the upside on the 5 minute. Okay, I don't even need to mark out the other confluences because market closes like right here. But again, a day where there's no trades to be taken. I want to, actually, there's no reason to even check. Okay, let's go into Monday of the next week. So this is Friday, Monday. Okay, Monday of the next week, we are still bullish, okay? We don't know that we're going to close to the downside on the 4-hour time frame right here, okay? We are going to be monitoring 4-hour lows and hourly lows, okay? 4-hour is bullish. Let's go into the hourly. Boom, the hourly was bullish going into market open, right? We can see prices moving higher and higher, okay? With that being said, we're going to go ahead and mark out hourly lows, okay? So boom, we have this hourly low right here. We have this hourly low all the way down here, okay? And we have this hourly low right here, okay? What are we able to do? Since the 4-hour and the hourly are in line, we're able to scale down into the 5-minute time frame. Okay. What do we see here? Okay, boom, price, liquidity gets swept. Both of these draws of liquidity get swept. Okay, what are we looking for? We're looking for a break of structure. Boom, we see highs right here. Nothing, highs right here. Finally, break of structure right here. Now what are we looking for? We see the break. We're looking for imbalances. Do we see any imbalances? No, no imbalances formed. Do we see, okay, we have this order block right here, okay, not necessarily the best confluence, okay, and then we have this breaker block right here, super wide price range. Again, what are we going to be doing with this? Not much. Okay, and then kind of our last hope, we can go ahead and mark out equilibrium from here. Okay, so this is a perfect example of a day that I wouldn't necessarily want to trade, because we can see price comes down, we do get this sweep, we do get a break of structure, but we don't get a fair value gap. We see price push like all the way down here. We see price chopping around. Yeah, we could technically say, okay, cool. Like if we're beginners and we're just following that shit step for step, bar for bar, cool. Maybe we make a fucking mistake and we want to go long here, right? But in reality, if we're looking at this price action, we're probably understanding that, okay, this sweep and then this break, we're already, 3 hours into market open? This isn't necessarily what we're looking for, right? We see price dip all the way down here, and then cool, we get boom, legs up. Let's just say we enter, cool, damn, stopped out. Okay, move on to the next day, Tuesday. Wait, what? Friday, okay, Monday, Tuesday, okay. So going into Tuesday, we are bearish on the 4-hour time frame, okay, right? We had a break, finally had our break of structure to the downside right here. Okay, so we're looking for shorts. Okay, we can go ahead and scale into the hourly time frame. We'll look at the hourly time frame. We are bullish, okay, on the hourly. So what does that make us do? That makes us scale into the 15-minute time frame, start looking for confluences. This is the first time that we've been able to have this opportunity. Okay, so we're going to go ahead and mark out these highs. On the hourly, we have these highs, and then we have these highs all the way up here. Okay, so we're going to scale into the 15-minute. See if we see anything, okay? We don't get a sweep of this. We see legs down. We sweep this, and then boom, we rally right back up. And again, this is a similar situation to the last time where it does end up going in our direction. But again, is this necessarily a trade that we want to take? okay? We do see a sweep. We do see a break of structure to the downside on the 15-minute, okay? We have an imbalance right here. We see it get filled. We see it get closed out of. Cool. Maybe this is our entry, right? How would this have played out for us? Probably really fucking well, right? We see price fall. Boom. 24 ticks. And again, this is stuff that we're going to be getting into way, way down the line as we keep adding to the strategy, talking about times that we want to trade, times that we want to avoid trading, stop loss, take profit, as we start adding even more confluences to our strategy so we can avoid days like this. But for now, right, we're purely just going off of what we know, and that's just the basic ass shit, right? So cool, if we did enter on this, fucking W, clap it up, dub, okay? But again, just talking about like further down the line, ideally, we don't necessarily want to be taking this trade. You guys are getting it now, I'm hoping. Or at least how to execute. Let's see, this was Tuesday, Wednesday. Is this the last one that we had? Wednesday? Okay, cool. We'll do last one, Wednesday, okay? I believe this is when price started getting really ugly anyways. So Wednesday, we are bearish, okay, on the 4 hour, I believe. Yeah, we're moving sideways on the 4 hour. Again, not necessarily ideal trading conditions, okay? We are bearish on the 4 hour, bullish on the hourly, or actually, we're bearish prior to market open, I believe. Let's see if this candle, yeah, this candle was even. So we were bearish on both 4 hour and the hourly. So what does that let us do? That lets us scale down in the 5 minute time frame. What are we doing? We're marking out hourly highs, and prior to market open, we didn't even know that this was a high, so we're not even going to mark that one out because this down candle hadn't even been formed yet. So we have this hourly high and we have this hourly high all the way up here. What are we able to do? Scale down in the 5 minute time frame. Okay, price opens, we don't get a break of structure to the downside, nothing happens, price moves up, we chop sideways. Pretty, right, like, do we want to be trading a sideways moving market like this? Not necessarily. We also had high impact news at the end of that day, okay? Or sorry, the following day, I believe this was CPI. And boom, right? We get a consolidating day. Again, do we want to be trading a market that only moves a total of 21 ticks within the day? Probably not. We want to be catching trending market moves. So no trade taken on this day. So overall, hopefully you guys, after this little session, you guys got a good understanding of what we're looking for, right? We first look at the 4 hour time frame. We look at the bias based on its trend. Then from there, we scale into the 1 hour time frame, and that pretty much gives us an overall direction of, okay, if it's in line with the 4 hour bias, we're able to scale down to the 5 minute. If it's not in line, we're able to scale down to the 15 minute. Following that, whatever time frame that we're able to scale down into, we're looking for a break of structure followed by a confluence, and then we can execute. Cool, cool. So that's our basic ass shit. There's still a lot more to add on to this to make it a lot better, because obviously, right, what we just walked through, it's not necessarily ideal. We're not able to catch trades every single day. We're not necessarily getting the best win rate, but it's a step in the right direction to be able to have an actual good, solid working strategy. And that's what we want to work towards, okay? So hopefully this video is helpful, similar to the little text out video that we did for you guys. Again, if you guys haven't written this down, please do screenshot it, put it somewhere, tape it on your fucking computer, because this is going to help you guys a lot after we start adding more and more onto this. Cool? With that being said, I appreciate you guys. Oh, also last thing for your homework, I want you guys to go back and rewatch all the trade recaps that have happened within like the past 1.5 months, okay? And all of them are pretty much based on this strategy. You guys can watch them as extra confluence to be able to see how I'm taking trades. Cool? Cool. Watch this video, or watch those videos, and it'll help you understand this even more if you need extra practice. All right, with that being said, I appreciate you guys. I'll catch you guys in the next one. Peace out.